What's going on, everybody? This video is going to be an introduction to futures, and maybe some of you guys have heard of futures but don't really understand how they work or how you make money from them, or might not even know what a prop firm is. And this video is going to help you guys get introduced to futures and kind of clear up some of those questions that you guys may have about them. So let's get right into it. First things first, when you trade futures, you trade through a prop firm. You can also get a live account, but for the best return on your investment, you're going to want to use a prop firm. So as you guys can see here, there is different accounts here. As you guys can see, there's a 25,000, 50,000, 100,000. And notice that it says challenge. So when you buy this, when you pay this price up here, you are paying for a challenge. And the way this works is basically, I'm going to be using this 25K account for an example. So the way this works is you have to make you have a profit target of 1500. So you would want to make your balance reach 26.5K before hitting a max loss limit of 1000. So some accounts, depending on what account you have, they have different drawdowns and different profit targets. And that's just basically, they differ because they have different rules on the funded state. But we're just going to focus on the evaluation for now. So basically, these accounts, most of them have end of day drawdown, meaning that whatever your balance is at the end of the day, your drawdown, your max loss will be 1000 from whatever your balance is at the end of that trading day. So let's say at the end of today you had 25.5K. Your max loss limit would be 24.5K. But your target would still be 26.5K. And once you pass the evaluation, you get put onto a simulated funded account. And once you're on that simulated funded account, you are able to withdraw your profits after meeting the prop firm's criteria to request a payout. And as you guys can see here, this one says you can take a payout weekly, and this says qualified only. But most challenges have a consistency rule. Let's see, the consistency rule is basically here. So most prop firms have a 40% consistency. And what does that mean? Basically, it just means that your biggest day cannot be more than 40% of your total profits. So for example, we're just going to use 1000 just because it's easily divided. So let's just say you're ready to request a payout and your balance is at 1000. 40% of 1000 is 400, right? So your biggest day would not be able to be larger than 400. And that's basically all the consistency means. It just kind of limits you from having huge days that outweigh small days. They want you to be consistent, right? So let's say for some reason you have a huge day of 500. You wouldn't be able to request that payout. That just means that you would have to raise your balance, and that would bring your consistency down. So let's just say you have another, let's just say the next day you make, I just noticed that says 1000K. But let's just say the next day you make 300, right? Use 1500 just because easily divided. But 40% of 1500 would be, let me get my calculator. Would be 600. So since your biggest day, which was 500, is not over 600, you would pass the consistency rule. And another thing that prop firms require before taking out a payout is most of them, I don't know why it's not saying here, but most of them require 5 winning days And what are 5 winning days? Basically, for alpha futures, I believe a winning day is considered $150. So you would just have to make over $150 to qualify that day as a winning day. Once you do the consistency rule and you have the 5 winning days, you're able to withdraw, as you guys can see, 90% of your total profits. And you're able to do this all at the price of $80. The only thing is that you do have to get through the challenge phase and you do have to follow the prop firm's rules. I also forgot to mention that these evaluation challenges, that some of them do have activation fees to get on the simulated funded phase. And this account has no activation fee, the zero plan. But some accounts, like I believe the standard plan, has like a $100 or $125 activation fee. And that's usually the norm. And with prop firms, is that they have activation fees once you do pass. But a lot of prop firms do offer the zero activation plans, and the downside to those is that the evaluations are a little more pricey. As you guys can see, the 50K here is 120, while meanwhile over here it is $80. So just go with whatever you think is the smarter route. But personally, I like the zero activations just because I don't want to pass a challenge and have to pay money. I want to be rewarded for passing, not punished by paying an extra fee. But that's just me. You guys can look around different prop firms. They offer different plans and different funded rules, evaluation rules. So you could go check that out yourself. So enough about that. We are going to be going onto the chart just to show you guys, so I could explain how these contracts move. So as you guys can see here, NQ is trading at 27.2245. Okay, so basically the way that this works is that you can see E mini contract, and there's also micro contracts. This would be the micro contract here. So the way that it works is 10 micro contracts is equal to 1 mini contract. I'm going to say that again. 10 micro contracts is equal to 1 mini contract. And basically, the way that this works is 1 micro per dollar over here on NQ is $2. So that means, simple math, 10 times 2. Each dollar over here on NQ is a $20 move per contract. And it is a little different for ES and YM. I actually don't know exactly what YM's tick values are, but let me see. I'm gonna pull them up right now. Okay, so here it is. As you guys can see here, one ES contract is $50 per full point, which is basically a full point is $1. And again here, $20 per full point, and YM is $5 per full point. So just divide that by 10, and that would be the micro contract. And I personally trade micros just because it allows you to manage your risk more. And if you get anything under a 100K account, 1 mini is crazy, to be honest. So now I'm going to be going over how I manage risk on these accounts. So I'm going to be using a 50K account for example. It's 2000. Oh shit. Profit target is 3,000. Right? So let's just say this is the evaluation, and I'm just pulling these numbers straight from here. You guys can see the profit target is 3,000 and the max loss limit is 2,000. So in the evaluation phase, I like to risk about 25%, and not 25% of the 50K, but 25% of your max loss limit. So that would be about 500 per trade. And that is just on the evaluation phase. The evaluation phase, you don't really want to spend too much time on it because you just end up getting stuck in what they call eval jail. And that's when you're just stuck trading in evaluation when you could be trading a funded and making money on funded. But once you hit the funded phase, you want to risk 10% to 15%. That's just to give yourself more opportunities and more chances to take a loss, because you are going to take a loss. You're not going to win every single trade you take. So 15% would be 200 to 250 per trade, or even 300 if you want to. I'm just going to put 300 just in case you want to get a little, just in case you see a really good setup. And if you are trading 10%, it would take you 10 losses in a row to hit your max loss limit. If you lose 10 trades in a row at this size, then you're probably not doing something right. You got to evaluate something. You're probably not taking good setups, or you're just being emotional and revenge trading, or you're just not using the right amount of risk. You're just oversizing. But yeah. Also, when you are trading futures, you got to keep in mind that you are trading to get risk to reward ratios. So I go by RR. So basically, I'm gonna show you an example on the chart. So basically, when you're taking a trade, you want to. This is very random. This is not even going to be an actual setup. I'm just going to show an example. But let's just say you entered up here. I'm just going to say up here. Let's just say you entered up there. But what I mean by risking an amount per trade is you're going to see here that this is my stop loss, right? This whole little white area is my stop loss, and all this blue is my profit. So you guys see here, this is a 3.5 RR, and just for example, let's just say I'm risking $100. My full profit would be $345 because I'm risking $100 to make 3.45 of my risk, right? Because these contracts, they move linear. They're not like options where they have Greeks and they move different depending on delta and theta and stuff like that. They move linear, so you don't got to really worry about all that extra stuff. You just set a stop loss and a take profit, and that's it. So here you really want to go for a higher risk to reward, and that's how you make your profits. Personally, I like to go for a 2RR at least. If it's anything under a 2RR, I really don't think it's worth it. But everybody has their own different trading style. Just find whatever suits you. Lower RR does have higher win rates, and that makes sense because it's less likely for you to get something like a 3.5 RR than it is for you to just get a quick 1.5 or 1 RR. So yeah. And I know that I didn't really go too in depth on the risk management, but I will be going further in depth in later videos. But that's going to be it for now. I did make a little pros and cons list about futures that I do want to go over real quick. So let's go on into that. So here I have the pros and cons list. And the first pro is that you don't need a lot of capital to start, and it is a high return on investment. And like I showed earlier, the account sizes you can start with as little as $80, and from there you can grind your way to taking out thousands of dollars up to like $5,000 to $10,000 per account. And it does take a lot of work, but it's doable. I've done it before. It just takes a lot of consistency and hard work. And another pro is that, like I mentioned earlier in the risk segment, that the contracts move linear. So you don't really got to worry about percentage changes and or theta, time decay, right? Because I know when I trade options, that is what kind of worries me a lot. So without having to worry about that stuff, you're able to focus more on the chart and what the chart is showing you. And that helps a lot because you can just focus more on your strategy and kind of let the chart do what it has to do. Just set your stop loss and your take profit and just let the chart do its thing. And honestly, this is probably one of my favorite things is that you are able to execute straight from TradingView. So what I mean by that is you can literally, I'm not signed in right now, but when you're signed into your account, you're able to just click buy and sell here, and you can drag your stop loss and take profit. And yeah, you could even use this little projection tool. I showed you guys this earlier, but you can literally have it set a limit order at wherever you want, drag it to wherever you want, drag and drop where you want your stop loss or take profit to be. And that comes in handy because I know sometimes when you're trading options, you don't get filled right away and you end up getting slipped. And sometimes you try to sell at a certain price, but your contract doesn't get filled, and then you end up trying to sell for a lower, you end up having to sell for a lower price that you're not that happy selling at when you would have preferred to sell for like a couple dollars more. But this eliminates that. You just set your take profit and your stop loss, and that's it. And you can do it straight from TradingView. You don't have to go back and forth on applications or be on your computer and maybe execute on your phone. So that just eliminates all that. More straightforward. And another thing that is great about futures is that you are able to trade the overnight sessions. And I don't know if a lot of you guys know, but there is overnight sessions, as you guys can see here on my chart. So there is the Asia session, a London session, and then this is the regular New York AM and PM session. So usually on charts, you guys will see, I'm gonna put them side by side. So if you guys look, this is these are both the S&P 500, right? So you guys can see they're almost identical, except that you see that SPY on this on the left side here does have these gaps, and over here you can see we have these gaps also, but on the right there is price action for those gaps on ES, which is the futures contract for the S&P. So you're able to trade these overnight sessions. The only time that the market is really closed for futures is, I'm not sure exactly what time it is on the East Coast, but it is from 2 p.m. Pacific Standard Time to 3 p.m. Pacific Standard Time. So just translate that to your time zone, and that is when the market is closed. So yeah, you're able to catch these overnight moves and position yourself before New York session opens. Now, the cons about futures are that you do have to go through that evaluation phase. The downside to that is that you are not able to trade to make money right away. You actually can, but you would have to buy a straight to funded account. And I didn't really go over that earlier, and I can go over it right now really quick just to show an example. So here I pulled up the Lucid Trading straight to funded accounts, and you guys can see here the accounts are a little more pricey, and if you guys see, they do have different rules than the ones that I had mentioned earlier, and they just are a little bit more pricey, but you are able to trade futures for money right away. You would just have to follow this 20% consistency rule and I believe 5 minimum trading days. I don't know where it says that, but yeah. These accounts have their ups and downs. Personally, I like to do the evaluations. Just, I don't know, because the funded rules are a little better. But these accounts are not bad if you want to get straight into it. But I would recommend, if you're barely getting into futures, maybe try evaluation a couple times and practice. before you drop some money on the straight to funded. But yeah, another con about futures is that you do have to be very consistent. And it isn't like one of those things where you can get lucky one day, make a lot of money, and then you'll be set. You do have to be consistent for, like I said, at least 5 minimum days to get that payout once you're funded. And that is after you pass the evaluation, which sometimes does take a little bit of time. And it's honestly not that easy, but once you are consistent and have a solid strategy that you are able to execute at a consistent rate, it does get easier. And another con that is a little tricky with futures is that you have to follow the prop firm rules that they're given to you. And I had mentioned them before, like the consistency rules, the minimum trading days. You're not able to just have 1 or 2 good days and just pull out the money, which is a big con. You do have to follow the rules and be consistent, because if you're just trading on your own account, you don't really have to follow those rules, and you can just make the money and take it out if you really desired. But that's where they kind of get you. That's why the ROI is so huge, because it is tricky, and you do have to go through a lot of loopholes. Not loopholes, but you got to jump through a lot of hoops to get that money. And another con that I would say is that futures, I think, is the ultimate test of patience and consistency. I think if you're able to trade futures and get paid out consistently, then I think that you've proven, not only to yourself but to the prop firms, that you are a consistent and you're a profitable trader. Because you can't get lucky and get paid out from futures. It really does take consistency and patience, because a lot of people just want to make everything in one day and they're not worried about tomorrow. But with futures, you have to take it day by day. You can't just hit everything in one day. And yeah, that's going to be it for my video about my introduction to futures. Please let me know if you guys have any more questions. I also do have an alpha futures code. I will be pulling that up. Just give me 1 second. So here, this is going to be my code for alpha futures. This is the only code that I really do have, and I do really recommend this prop firm. They do have they have great account sizes, nice entry sizes. They are one of the few prop firms that offer the $25,000 account. This is pretty new in the prop firm space, so I would recommend taking advantage of it. And right now they do have a 20% off code, so go ahead and run my code at checkout. I will also be leaving a link in the description. But thank you guys for sticking through this. Sorry if you guys hear a lot of background noise. It's pretty windy. So yeah, thank you guys. Leave questions if you have any. And yeah, stay tuned for more futures content. Thank you.